Welcome everyone to the next weekly outlook for this upcoming week. As always, we're going to go through fundamentals and then we're going to go through the technical analysis with Stephanos here.
What's going on, guys?
All right, so we're going to go through, there's a ton happening from a fundamental perspective. And so it's pretty much a follow up on everything that we have been talking about in the last week. We still have inflation concerns, and we're going to go a little bit more deeper into that. As central banks, they start to show signs of worry now, where we went from it's just transitory to now it's actually staying a lot longer than they expected, and everything that's kind of affecting the inflation at the moment. So you still have that, you still have some geopolitical tensions going on, right? And you still also have Brexit, post Brexit consequences, and now the EU leveraging the condition of the UK where energy prices are increasing there, and inflation obviously increasing as well in the UK. So the EU trying to leverage that little aspect in order to get access to the UK fishing waters. So you have those still going on. You also have the Delta variant. It hasn't been much in the headlines as it used to in the past couple of weeks or couple of months, but the effects are still there. So now the government's also, central banks are talking about tapering. The government's still trying to work around the policies to help open up certain aspects of the economy. So everything that we have been talking about for the past, week, for the past couple of weeks, for the past couple of months, matter of fact, they're
Months.
still around, and we're just kind of adding on to it. What was that?
I said months.
Yeah, for months.
Been saying this for
Even
months.
yeah, and even like, late last year as well. So everything is still, we're still seeing it being developed. So, you still want to keep your eyes on all of those macro fundamentals that are coming out. And now we're just kind of building upon that. So the very first thing that I want to go over is like pretty much the broad aspect, and then we're going to go into the Bank of England, and then also we're going to get into some post-Brexit consequences. So now I'm starting to narrow down after this into certain central banks, but you can pretty much apply this to any central bank that you're looking into. The Federal Reserve, you can look at it from Bank of Japan's perspective, the EU's perspective, any economy that you're essentially looking at or any currency that you're trading is the same exact thing that we're seeing happening across the board. So now we have central bankers that are spooked by signs that inflation is lingering for longer than they expected. Now we have central banks that are starting to withdraw the emergency stimulus that they introduced last year because of the pandemic. So all the money that they've been putting into the economy, all the quantitative easing, we're starting to see that taper a little bit. And with inflation accelerating, the Federal Reserve is set to slow its asset purchase program. So we already know that they were talking about tapering, pulling back money. So then we're going to see exactly when are they going to start. The key date for the Federal Reserve, what they have mentioned was the NFP that just came out last Friday. And so, if they were to see some improvement in that, then they consider that to be one of the determining factors to start tapering. But obviously, we saw NFP, much lower than they expected, much lower than the previous as well. So now we're trying to see pretty much that's the one determining factor that's pretty much out the window for the Federal Reserve. But now we're starting to see what are some other factors that they're going to start considering in order to start tapering, or is inflation just going to be the main factor for them that is actually going to help them make that decision. So that's the first key thing that you want to take a look at if you're trading the US dollar or even gold, for example. And then there's other nations like Norway, Brazil, Mexico, South Korea, New Zealand, who are actually already starting to increase their interest rates or have done so. And here are some of the key macro fundamentals that you want to be watching out for, because this is what's causing the inflation. You have supply chain strains, right? So you still have a lot of ships that are pretty much sitting at the ports here in California, in Southern California, a ton of ships just sitting there in the ocean. And then you also have, a port still close in China, a lot of the major ports. So you still have a lot of supply chain strains and disruptions happening. You have surging commodity prices, the energy prices going up, crude oil prices going up, and all that type of stuff. Post lockdown demand. So there's, I would pretty much pair that with the labor shortages. That would be one example where after the lockdown, now as things are starting to open up, jobs are opening up, but people are not filling those jobs, right? And that's where the labor shortage is coming in. That's just one example. So post lockdown demand could also come into the services side, but there's a lot of businesses that didn't survive the pandemic, right? And so you still have that shortage coming in, and then also the ongoing stimulus. So unemployment benefits pretty much just ended recently in the United States, and so we are going to see the effect of that in the upcoming unemployment claims and upcoming job openings and all of that stuff in the United States. So that's another thing that you will be watching out for. But these are some of the key fundamentals that are playing a huge role in inflation at the moment. And now they're starting to look into whether or not this is actually a stagflation, where you are seeing growth slowing down as inflation is increasing. That is also not a really good uh, condition, or a really good phase to be sitting in at the moment, right? So, how are you going to make sure that your growth is not slowing down? You're actually increasing the growth while coming or while bringing back down inflation. So these are some of the macro fundamentals that you want to be watching out for. This is on a broad level. This is what's happening across the board in central banks, and then you're going to see as we go on to Bank of England exactly what's happening there, where the steps that they're taking, which right now it seems like they're not even talking about tapering. They're just going right into interest rates, increasing interest rates. Whereas the Federal Reserve is taking kind of a different approach, where they're actually talking about tapering first and then pulling back the money that they've already injected into the economy and then increasing interest rates ultimately. So these are the different approaches that you're starting to see, but the concerns are the same across the board for all central banks. So as you go further down into the article, you're going to continue to see some more details along the way. The Group of Seven, the US Federal Reserve, and then as you continue down, European Central Bank and all this type of stuff. So you could go ahead and take a look at the article here and kind of go into those details. But these are the broad issues that all central banks are facing at the moment.
Crazy times.
Yeah. And this came out over the weekend, where Bank of England officials doubled down on signals of a rate hike. As we continue down here, so there's two central bank officials who moved to reinforce signals of rise in UK interest rates to curb inflation, with the one telling households to brace for a significantly earlier than previously thought increase. And so we want to see, like, pretty much, is this going to happen before the end of the year? That's what the sentiment is. That's what the sentiment was put out over the weekend. So right now, there's no concrete decision that they are going to increase the interest rates, but now you're starting to see exactly how we saw, like, this disconnect in the Federal Reserve among officials. It's the same exact thing that's happening in Bank of England, where right now you're starting to see some officials coming out and talking about, yeah, we might start seeing some rise in interest rates, a hike in interest rates. And then obviously within the Bank of England, you are going to have officials who are going to say, we don't think we're ready just yet. We probably need to see some more data. We're going to take the conservative route.
It's going
Right
to be
here.
the first major bank to increase interest rates too, which is, you got Australia talking, you got New Zealand talking, Canada talking about tapering and stuff like that. But this will be the first major bank to increase interest rates.
Yep. And then you have Governor Bailey, who also warned of a potentially very damaging period of inflation unless policymakers take action, whether that's increasing interest rates first or whether that's tapering first, or are they going to take like some other action and go another route, but pretty much ending up either tapering eventually or increasing interest rates. So it seems like November is pretty much what all the central banks, Federal Reserve, you have Bank of England, the European Central Bank. So November is kind of where everyone is sitting at the moment to kind of start thinking about, start talking about, maybe even put out some definite decisions of whether or not they're going to increase interest rates.
Mm.
But obviously, we know that, everyone's looking at whether or not there's enough data coming out that would support the increase of interest rates, or do you just increase interest rates, make borrowing that much more expensive for consumers, and now you're pretty much sitting in a very slow growth economy with inflation increasing, and now borrowing is so much more expensive for consumers, and now eventually you're going to get into the cycle of again injecting money into the economy, or somehow encouraging and incentivizing consumers to go out and spend more money, borrow more money, and kind of, get this growth cycle going again. So that's where we are right now. And then as you continue down, pretty much the same exact thing. And then the next article is pretty much an add-on into that,
Before you
where
go over there, I like that chart that they have over there for the Bank of England, like
mhm,
the
right
where
here.
everyone basically sits. That's
Yeah.
pretty cool.
Yeah. So that's kind of the disconnect that we're seeing
Yeah.
at the moment, right? And then this one is kind of just adding onto it that came out earlier today in the morning, where it says that the Bank of England may be getting ready to kick off a series of interest rate hikes with a bigger move than markets were assuming. So now you have to think about it from an investor's perspective. What does that mean for their consumers? Consumers at the core of the economy. So you always have to think about how does this affect the consumer, and then how does that affect the businesses? How does that affect investors into the economy? All right, and then again, I'm just gonna go ahead and show you guys the title. You guys can go through it, but that's pretty much what both of these articles are saying. Right now, they're playing off of the market sentiment because we don't have a definite answer or decision about whether or not they will for sure increase interest rates. Now, as of right now, everyone's saying that we're looking towards November. There's a sentiment that they might start increasing interest rates by the end of the year, but we don't have a definite answer of yes, whether they will or they won't. And then now you're coming into the post Brexit consequences. France gets EU countries backing to warn UK in fishing row. So France said that it received the backing of Germany and 9 other European Union members in its dispute with the UK over fishing rights, and highlighted the possibility of countermeasures. So we're still seeing post Brexit consequences still going on. Right now, we're seeing the EU. This is like one of the examples, or one of the details of the EU trying to leverage, whatever it has in order to gain access to the UK fishing waters. But the Britain's response to requests for more fishing licenses is incomplete. So I don't think right now the UK, you have this pretty much like battle going on between the UK and the EU, where the UK is asking the EU to be a little bit more cooperative in certain situations, and the EU is like, yeah, I don't think that's going to happen. And then the UK pretty much reciprocates that behavior when the EU comes back to it and asks for anything in return.
Mhm.
So
Yeah,
that's
we've
what,
been talking about the fishing debacle for since last year.
yeah, and that's still going on. So pretty much at this point, both of the parties are trying to leverage whatever they can in order to kind of come to, I guess, a common agreement, or kind of have like a win over the other party kind of a thing.
That poor industry just getting pushed around left and right by both countries,
Yep.
specifically France and UK. That's and then probably Ireland as well, right?
Yeah, and that's why there's a lot of fishermen, and there's like a lot of unions and all of that who are completely against this, like, post Brexit talks that they keep having back and forth,
Hmm.
where they're saying like no matter what you're talking about, it's not bringing any good to us, right? And so that's where the ground level people are pretty much sitting at, while the officials are pretty much trying to talk this out, and then again leverage whatever they have in order to gain like a win over the other.
They probably feel like they could do a better job.
Mhm. There were like a lot of different suggestions, like even through Brexit, as we're going through that, there are a lot of different suggestions that were being put onto the table by the union leaders, who are saying like, why don't you go this route, because this is
Hmm.
much more beneficial, or what you're doing is not beneficial to us. But again, we did see some of those policies being pushed through, whatever
Yeah.
the officials were saying. So getting into the economic calendar today, pretty much starting off quite easy when it comes to economic data this week, and then going into London session tomorrow. If you're trading the euro, you have the economic sentiment to watch out for. I personally place a heavier emphasis on the German economic sentiment, given that that's one of the bigger economies in the entire eurozone. So I personally look a little bit more on the German economic sentiment, and then that kind of tells me where are we sitting, if I'm trading the euro. And then you have job openings that's coming out. This is
It's
40
gonna be
days.
huge.
Yeah. This is 40 days after the month ends. So that's another data point that you want to watch out for. This is not reflective of like the most recent data. This is reflective of September's data. All right. So this is not October's. I
Mm.
just want to make that clear. This is September's. And then you have FOMC members speaking going into New York session. And then you have a pretty heavy GDP pre-London session. So a lot of GDP data coming out, GDP, gross domestic product. You have the goods trade balance, index of services, and then you have industrial production, manufacturing production. I tend to pay a little bit more attention to industrial production, manufacturing production, and GDP,
Mm.
because that tells me like how much is actually being produced, which in return is going to tell me like what can we expect if we're looking at the services side, and then the consumer's behavior as well. So this is what I tend to look a little bit more at, if I'm trading the London session. So I'm going to give it about 15-20 minutes before the or after the London session opens up, to let the market price in this data and then start trading the sentiment. And then other than that, you have a pretty easy London session on Wednesday. On Wednesday, New York session, you have core CPI coming out. Pay real close attention to this. This is inflation from a consumer's perspective, right? And this accounts for a majority of overall inflation. So you want to pay really close attention to this. This is 16 days after the month ends. So again, this is September's data. So you have CPI, and then you also have core CPI, which is pretty much the same thing, excluding food and energy. And energy right now, we know that is one of the main factors that is also affecting inflation overall for all economies, right? So I would personally pay a little bit more emphasis on CPI in general instead of just core CPI. And then going into the rest of New York session, you have the FOMC meeting minutes, you have the federal budget, you also have some more FOMC members speaking. And then pretty easy Asian session, pretty easy pre-London session as well. And then Thursday you have PPI coming out, which is inflation from the producer's perspective. So another data point that you want to pay really close attention to. And then you have the unemployment claims coming out as well every Thursday. And then pretty much, pretty easy session, not too much of a heavy data coming out. And then Friday you have core retail sales coming out of the US. So the New York session then is probably going to be a little bit more volatile as we're coming close to the end of the week. All right, and now let's go ahead and hop over to Stefanos for the technical analysis.
Awesome. Great breakdown, Sharma.
Thank you.
Get into what's going on, guys. As you heard from Sharma, she did a great job of the fundamental analysis. Now we're going to get through a quick breakdown because most of you guys are the same people that watch this every week. So we're going to go through a quick breakdown of the higher time frames and then get right into the lower time frames because let's just be honest, you guys are here to see where price is going to go and catch a quick move from us. So as you guys know, we have this low that was created down here around 120 flat from the 2008 market crash, right? Subprime mortgage crisis brought us all the way back down here. We had a little correction. We came right back down to retest that low. And then we came in for that market recovery that we were in. And then, price basically just tanked from Brexit, right? Bringing us all the way back down here. And then COVID happened. That's what this is right over here. So we're just going to draw a quick support right here. And then we're going to draw a quick trend line over here, and it looks like we're respecting that trend as well. Now, our main confluence, something that's more important than trend lines, is support and resistance. And as you guys know, 152 is significant when it comes to GJ right now. And we can bring that all the way back over here to the left as well. So looking over here more closely at the monthly, you have these candle body highs over here that price is now rejecting. We've been rejecting for months now. So that's around 149, anywhere from 149 to 149, 400. Price has been coming down into that zone over here. And now, as you see, and as Sharma broke down, we have these inflation fears coming in, as well as, again, like I said before, the first major bank in the world to increase interest rates before tapering. So when you increase interest rates, you're increasing the value of that currency. So that's why you see this massive rally over here to start October out, bringing us all the way back up to 156 potentially, right? We have a couple levels that we need to break. I'm not saying we're going to reach 156 yet, but with the market sentiment going on right now in the world, and especially the Bank of England and in Great Britain as a whole, a lot of things are pushing us right back up to that area. So looking over here at the weekly, we just broke a multi-month and you can call it a multi-week bearish trend over here, where price is just respecting this bearish trend, printing lower lows, lower highs, coming right back down to 149 multiple times over here, and then retesting that previous area, and then continuing down to create that new low. But right now, 149 is holding significantly down here. And as you can see, we're lining up perfectly with our trend over here from the beginning of Brexit, that little tank that we had over here.
Beginning of pandemic, not Brexit.
Oh, yeah. No, we were just talking about Brexit. That's in my head. Great call. Yeah. The pandemic brought us all the way back down to 127. And since then, we've just been in this bullish trend. And now it looks like we're tapping into it. We got that very key area right over here that a lot of us have been looking at over here. Price tapping into it, 149 being a significant previous resistance, now a new support, pushing us right back up. Now,
And
looking
this
at the
is
daily,
something that we also, like, mentioned in the last, outlook, I believe, where it was like every time price taps into that zone, it just shoots up, and that's
yep,
pretty much what we just saw happening.
yep, yeah, 100%. You got multiple times, and this is where you get your history from as far as like, what am I going to do now when price comes to this area? Let me look back and see what happened the last time price reacted to that area. Take a look multiple times. Oh, I don't want to do that. There you go. One, two, three, four, five, 6 times price tapped into that area, and we had a massive move up, right? Price pushing up, price pushed up, and you guys get the point. I'm not gonna keep
Mhm,
doing that. So, um, as you guys see, we broke that multi-month downtrend that we've been respecting over here with a very strong bullish move over here, breaking previous levels. We had a very significant level right over here that we finally broke out of. A nice close above. This candle created its bottom wick yesterday, or basically today,
mhm,
past the high of that candle and continue right back up, creating this new high up here. Now you got to look at why did it react to that area and start retracing from there. If you
mhm,
take a look at 155 or 154 500, you have this level right over here. And I'm sure if you look to the left even more, all the way back there, you could see price reacting to that as well.
and it's the
So,
same exact thing with the little support zone that you made. If you extend that over to the left, then you
right
see,
here.
like,
Oh
yeah,
yeah. Oh yeah.
right, how price has been respecting that area of support, and if you take it further to the left, then you see, like,
Oh
that
yeah.
resistance, right?
Absolutely. And that it's so important to go back and look at that. It just adds that confluence and um that confidence for you when it comes to price coming into that area. It just adds more confidence. Like, okay, we're at least going to get some sort of reaction, whether it's big or small. We know
Yeah,
that price is going to react in that area.
yeah,
So as you can see, did the same exact thing right over here. Looks like the current daily candle, if we zoom in a little bit, already
mhm,
created its bottom wick. We're
mhm,
extremely bullish. There's no reason for you to be selling GJ right now, right?
mhm,
Especially with market sentiment, what we just went over, all the fundamentals that Sharma just went over. No reason to be selling GJ.
mhm,
All you're looking for is new supports to grab, basically buying the dip, right?
mhm,
So price created that bottom wick. Where did it create that bottom wick at? If you take a look at the area to the left, you had a previous significant support over here. Remember this range? If you guys
mhm,
trade GJ, you remember being in this range, price pushing all the way up to 156. Then we've been correcting since then. Now, we have this previous area right over here,
yeah,
previous support, resistance, and that price created that bottom wick over here, and now we're continuing right back up.
mhm,
Looking at the 4 hour, we're in a range right now. And if you look to the left, we're in this same exact area, right? So where's our next target once we break this resistance? And we could be correcting. Not that I want to be selling GJ right over here. Let's get rid of this mess. And we've been respecting this bullish trend since tapping 149 flat once more, right? So could we be kind of consolidating in here now that we're stuck in that previous range, right? Could we consolidate in here, maybe tap this trend again and continue up? I doubt that's going to happen. I think we could continue right back up, but right now I kind of want to stay out of this range over here. I'd
mhm,
rather wait for price to break out of this range, break out of that resistance. You may have a play, to be honest with you, in here, but it gets dicey in here, especially as you guys saw with the range to the left over there. So we are holding support. 153 800 is holding support. We are pushing up. See what we look like on the 30-minute. So the 30-minute, we've been respecting this little trend right over here. I'm not really going to draw it, but
mhm,
price has kind of been respecting this trend, and now we're kind of consolidating. But we're holding this support right over here. We got a nice rejection right over here. Do you have enough range to take this thing up?
mhm,
Right? And it's up to you. because right now, as Sharma pointed out, for the economic calendar over here, what do we have tomorrow morning that you guys want to be aware of that maybe we're going to range until then? We got 2 a.m. We got some important fundamentals coming out and economic data coming out for the pound. So I think we could very well be continuing to range in here. But first, you just want to see how many pips you have in this range. Got about 30 pips, which
Mm.
if you want to grab a quick scalp, you can. Just be aware of this area right here. And if you want to bring that to the left, get this wick over here as well. Um, Get about 25 pips in here that you could trade in. Maybe wait for a close above this resistance right here. You got a clean move to the left. And I think if we close above that area, we should be coming up to 154 or 500 to retap that area and possibly hold a runner to continue up. But to me, like I said, we've been just pushing up over here. I don't know if we're going to have much of a move tonight before that data comes out.
The way that I would do it is if you go back up to the 4 hour time frame, I would start narrowing down onto your price action and into your ranges. And so you know exactly where you can take your trades. If you go back to the left where that major consolidation was,
Sure.
yeah, so here I'm gonna start narrowing in into my price action. And what I mean by that is if you look at the current levels, we're sitting kind of at this resistance area, right? So what I know for a fact is that I'm not going to be taking a trade here, and I'm not going to be taking a trade as price is stuck in here, right? So this is pretty much the level that price is kind of stuck in at the moment. This is all your consolidation. Anytime price is in that level, I'm not going to be taking a trade. So what I would do is create like a horizontal line right at this resistance area right here, and then look to the left and kind of see if it checks off. As of right now, this level checks off right here, right? So yeah, I'll go ahead and delete my annotation. But the line that you just made, Steph, knows right at that, we see like how price has been, there you go. So if price breaks above that and continues bullish, then that's a potential entry. And then now if you look to the left, then you'll see how this same exact level, let's say 154 200, I'll just round it up, has
Yep.
been respected as resistance in the past and support in the past, right? You got resistance, you got, this support area right here, you got support right here, that resistance right here. It cuts right through that consolidation resistance where you have fake out. So if price breaks above that, then yeah, you have that clean buy opportunity to the upside right here. But also notice that now we just broke out of a daily time frame bearish trend, and even is it a weekly time frame bearish trend that we just broke as well?
Yes.
So now, obviously, what do you need to see when price is breaking out of a higher time frame structure like that? You need to see some sort of a retest,
Yep.
right? And so now, obviously, that's a lot of bullish momentum. That bullish momentum came from the sentiment of Bank of England officials saying that we could possibly see a hike in interest rates soon, right? And so that's where that sentiment play came in, and you saw it from a technical perspective as well as we break above these levels. So you have that 20-25 pip move, and then are we going to continue up to 156? But before that happens, obviously we need to see some sort of a retest prior to looking for any swing buy opportunities. You could scalp your way up, right? But for swing buy opportunities, you definitely need to wait for some sort of a retest and then a continuation back up.
100%. That's why I was saying, like on the 4 hour, like
Yeah.
you really don't want to be trading in this if you're an intraday or a swing trader, right?
Hmm.
If you want to scalp, if you guys are scalpers in here, I know everyone's got their own style, but
Hmm.
there are opportunities in here that you could grab, and especially a safer buy would be above 152 250 or 154 250.
Hmm.
With a cleaner move over here to continue right back up. Because if we do close above that area, get a little retest of it, especially this level of 154 200 that
Hmm.
we Sharma marked off, we should be continuing right back up to
Yeah.
154 500.
Everything is structured. So just look at this too. This was structured to the downside. Even though it was just a corrective move, a retracement of that entire bullish move up that we have. Yeah,
Hmm.
liquidity grab, price actually give me one
Sorry
second.
about that.
It's all good. So you got that liquidity grab wick right there, came back up, closed above this area, created a support, right? Pull back up, you got your first high, price makes another support, and now we're breaking above that. So if price even closed above this level here in the next 23 minutes or so, and we got some sort of a retest here to create a new higher low and then continue back up, then you have all of those clean buys. But again, the entry would be at the break above this zone. So even if I get like a retest, for example, right into these areas, like a bearish candle and a continuation up, the entry would be right at this level as price breaks above these resistance areas.
Absolutely. And also pay attention to the price of this resistance or the support right over here,
Mhm,
right? 154 flat. So we're holding 154 right now pretty strongly, and
mhm.
we're just pushing right back up. But again, I'm waiting for this level to be broken, and we can take this up.
Yeah. So
Push
right now,
right
as you
back
can see,
up.
the candles are legit rejecting that 154 200 area, which comes from the 4-hour time frame. And we see price rejecting that area previously as well. So you're sitting at some good levels. You're seeing it from a technical perspective, these trades lining up. Understand that right now, you're pretty much trading based off of market sentiment. Those fundamentals coming out about the Bank of England officials coming out and saying like, we might increase interest rates. That was like a fundamental, but a play on a market sentiment, and then a continuation.
Absolutely.
Yeah, I
So
think we're
we
ready for
ready for
gold.
gold? Yes.
Let's do it.
The gold. And for some reason, I don't know if you've had this issue, but my trading view isn't giving me this data. I keep refreshing the page. I just
Think
reached out to
your
them.
broker change. It says easy markets up there. I think usually you have another broker.
I usually do, but this is the closest to Trader's Domain, which I use as a broker.
Okay.
Like this is
Try
the
refreshing
closest
it.
I've been
Oh,
been trying everything. So I reached out to them to see what's going on. But normally with easy markets, I'm able to get the full data.
okay.
But yeah, I have no idea. But anyway, looking at gold over here, as you guys know, 1680.
Mhm.
This is a level I always mark off basically first. Has been very significant when it comes to gold, right? We were kind of consolidating over here around March and April, right? And that's where we got that solid push. They came right back up to our historical high of 2074, right?
Mhm.
So we ended up creating this high, and now we've been in this corrective phase with the vaccines coming in. Then we got some, fears of inflation. You had geopolitical issues going on, things going on with China as well, and then we had two straight solid months of NFP. Unlike this past month, but we had two straight months of really good NFP, which pushed us all the way back down to 1680, where we tapped and rejected this level over here. So right now, I want to pay attention to the more recent price action over here and how we've been respecting this previous resistance up here of 1830,
Mhm.
right? Three straight rejections, 3 straight months of that area, finally pushing down. This is a very significant area too, around 1764. Right in here, we'll mark it off on the lower time frames, but it looks like we ended up closing below this area, right? If we'll just mark it off right now, and then we'll adjust. But we had this previous support over here, resistance as well, right? And then we got a nice solid candle closing below with a wick to fill. This candle looks like it came up to tap into that area. That was with that NFP data that came out on Friday. And then we ended up rejecting that area. And it looks like this current monthly candle, the month is still young. It's only the 11th. So this candle could be flipping bearish to continue right back down. But a lot has to do with the data that comes out this week when it comes to JOLTS job openings, CPI, retail sales. There's a lot of things coming
PPI,
out for
yeah.
the U.S. What was that? PPI?
PPI,
Yep,
CPI.
yep, everything. It's coming out. It's big, big week. Um, but anyway, we got this candle starting to flip bearish. So looking at the weekly over here, I pretty much marked this off pretty correctly. But
Mhm.
um, right now, price is kind of stuck in this range. As you can see, we got that rejection over here. We've had multiple rejections. We got the close below 1764. This candle tried to come right back into the range, rejected. Rejection, rejection, rejection. So are we going to continue pushing bearish to continue right back down to 1680? We have a level that we need to break before that, and that is 1720,
Mhm.
right? Previous support over here, if you look to the left, could argue that we have that area in here as well, previous rejection area. But right here, you have plenty of wicks, nice rejection over here to the left as well. If you take a look at this wick right here, candle ended up closing above. Then we created a nice run right back up to retest this previous bearish trend, or actually to create the bearish trend, to be honest with you. But clear that out.
I think it may have been gold instead, where we were talking about every time it taps into 1680, there's a bullish run up. But I know we talked about it, about one of the pairs. I'm just not sure which one last week.
Well, it definitely happens with GJ too with
Yeah.
149. But 1680 has been pretty significant since the start of 2020.
Yeah.
And every single time we've been pushing down, this created a perfect double bottom on
Mhm.
the daily. If you take a look,
Yep.
right, we came all the way down. We were respecting this bearish trend over here at the time, kind of pushing all the way down here, and then we ended up creating this double bottom. And then ever since then, we made that massive run up, which was
Yeah.
a nice move over here. I think you grabbed this whole thing, didn't you?
Yeah.
Yeah, that was beautiful. So, anyway, right now we're just kind of consolidating. Everything's all over the place. I do not want to trade anything in here, right? Maybe if you get a close below this area right here, because once you do have a cleaner move right here and right here. Because if you close below that area, if you get certain fundamentals coming out, some good data coming out of the U.S., if you get that close below 1745, you should be coming down to 1720, 1723, anywhere in this area. I think we should be testing that. But anywhere in
When you
here,
go on to the 4 hour on the daily time frame, the way that I had my zone like marked off on the daily time frame
okay,
was that I was looking at this wick right to the left, this entire thing, and using that as like as my confirmation.
okay,
If
I
price
like that.
breaks below this, continues down, then at the very least you could come down and like, kind of catch that move, and then take your partials, move to break even, be risk free, and then let the rest of the trade run. Where obviously you would want to see some sort of a break and retest of this, and then a continuation down, and possibly look for a scale in. And if we have enough weak fundamentals coming out in like for gold, then we could come all the way down to 1680.
Yeah. Yeah, I like that, and that's pretty much the psychological level too. That's around 1750. So if we
Yeah.
get that close below 1750, I mean, we don't have to break it any more down than the daily and the 4 hour right now on gold, but
Mhm.
you get that close below, that should be pretty solid over here.
Mhm.
And now I see what you're talking about too,
Yep,
right
that
there.
one right there.
I would just rather wait for price to close below 1745,
Mhm.
just because of all these wicks. You
Yep.
definitely want that close below, and then you get the fake out over here. Um, so prices, whenever prices like this, um, I tend to stay out.
Yeah.
you know.
So that's the entire zone that I would stay out of, but once price breaks below like
Yeah, no,
1750,
I definitely see what you mean.
yeah, that's a good scalp coming down to around 1745 or 44.
Perfect. So I think that that about does it for the breakdown. Hope you guys enjoyed it. Got a lot out of it.
And trade safe this week, pretty
Yes.
good fundamentals coming out, macroeconomics coming out. And we already kind of laid out all the macro fundamentals that you should be watching out for. And obviously, just follow the macro fundamentals from last week as well. Delta variant, all of that is still affecting economies. You have supply chain disruptions going on, you have inflation going on, you have labor shortages, you have energy prices, commodity prices increasing. There's a ton happening from a macro fundamental perspective, but also look at the higher time frame structures for whatever pair that you're trading. It could be, USD JPY, it could be Euro, USD GP JPY, anything like that. But look at the higher time frame structures, because those are going to be setting up, and you will see the fundamentals coming out accordingly. So trade safe this week. And then, as always, if you guys have any questions, feel free to comment below or reach out to any of us, and I'll put our contact information at the end of the video.